Thanksgiving may bring a quiet moment for markets, but December is shaping up to be anything but calm. With rate cut probabilities rising, historic S&P trends in play, and unexpected moves in the bond market, the final month of the year could set the tone for 2026. I'm Johanna Botta, and joining us today to break it all down for us is Alex Ridgers, VP Global Head of Retail Dealing Desk at StoneX. Good morning, Alex, and
Morning,
happy Thanksgiving to you.
Happy Thanksgiving.
So now that the government shutdown is behind us and that risk is behind us, what kind of foundation has November actually set?
We've started to see September data coming out of the US. Again, post-shutdown, everything's a bit delayed. But by and large, the markets have chosen to ignore that data. Around those data points coming out, there's been very little volatility. I think the view being, look, that's old data now. We don't care. We want to see what's happening in the future.
Right.
But what we have seen, almost a tug of war in November in terms of indices, is that, initially, like the NASDAQ dropped over 2,000 points, so very much fear dominating. But in the last week, we've seen a real correction where I think we've basically value investors coming back. So we're now sitting above the average of October. So in a way, it's been, say, with September data not saying a lot and it being a bit of a tug of war both ways, it's been a bit even.
Okay, so a bit of a choppy month with mixed signals then.
Yes, yeah.
So what can we expect from indices in December?
Well, as you know, I'm normally positive. I like to balance out. Again, the general media, there are normally sort of negative, fear sells articles. When we look at historic performance from the S&P since 1950, December rules in terms of how many months has it gone up compared to how many months has it gone down. So we've had 55 out of 75 positive months, which is pretty impressive.
Yeah.
So in that sense, December is normally, it wasn't last year, so you can't say every year, but normally positive. So that's very good. Then talking about what we've got in December, we're now at an 85% chance of a rate cut. So that's happening on the 10th of December.
Right.
But what I'm sort of interested in is after that rate cut, what's next? We're waiting, it looks like, till between April and June. There is no April jumps to June till the next Fed release. So it's going to be one of those months at the moment that's going to be the next rate drop. So we've almost got this long period with no rate expectations.
Right.
And for me, when we're talking about markets being driven and what's driving them, traditionally, we've seen it for the last year or so, it's very much been interest rate expectations. Again, interest rates expected to fall, markets rally.
Yeah.
That rhetoric isn't going to be there. Investors aren't going to be able to hang their trades off that. So it could be a very exciting period where we're looking out for signs of what's going to replace this in the rhetoric.
Yeah, so lots of potential catalysts ahead then.
Yes, exactly. And also we've got non-farms, which I think is delayed. It's coming on the 16th. So that has the opportunity to almost reverberate around till Christmas and the New Year.
Let's bring it to the UK now. I know how I reacted to the budget, but how did the markets react to the much anticipated budget that was just released yesterday?
Well, in two words, largely positive.
Okay.
So again, we're not really talking about the FTSE because the FTSE has so many international companies with international revenues that really that doesn't care really day to day about UK PLC and what's going on. But when we're looking at the bond markets, the bond UK long dated gilts, which is like the long-term government bonds that are released, they had their best day since April. Okay. So it's quite an effort. So essentially, what we've been looking out for is what we're typically trying to assuage the bond vigilantes that say UK PLC is in danger. So they don't want to touch bonds. They're selling, and aren't going to buy UK government debt unless they're paid a lot of interest. So largely that's been good. So one thing, from one perspective, Rachel Reeves has done, seems like reasonably well, in terms of there was that fear that what is she going to tax? What's going to be taxed next? Is everything going to be taxed? Is everyone going to leave and move to Dubai? That's the sort of the rhetoric around London at the moment. But she was very much helped out by the Debt Management Office announcing that they are going to greatly reduce their sales of long-term government bonds. Yeah. So I think last time we chatted, we talked about this happening, quantitative tightening ending in the US. So essentially what this means is the governments are selling less bonds, especially in the long dates where they've traditionally sort of been selling the majority. So what this means is bonds should rise, and what that means for, it's a real fillip for Trump and the Labour government, that means with their borrowing costs likely to drop, their finances look a lot better.
So just in a few words, if you can summarize, what signals should we look out for in December?
Well, largely, almost as I described in November, we've got quite a balance at the moment where companies are profitable. There's no sign of any drop in company profitability. That's largely stable. But at the same time, we've got fear balancing that. So in one sense in December, I'm looking out for that idea of like a fear index. I'd love to have this idea of among institutional investors in the press. How many times do they mention fear at the moment? How's that changing as we go through December? Because again, that could drive markets lower, but at the same time, if people stop talking about fear, stop talking about an AI bubble, we're going to go higher. But as I alluded to earlier, the main thing I'm searching for is now we've almost got this big gap from the 10th of December until April or possibly June with no rate cuts. What's going to capture investors' sort of interest next? What's going to be the next big driver? So I'm going to be keeping an eye out in the news for what's being mentioned, what's starting to snowball as like the next big thing. Mm-hmm. So in some ways, it's like a classic end of year. It's like what will be happening, and I'm sort of, my view is things are going to change, which for the better or worse, who knows? But I think things are going to be changing. So what's the next big trend? Keep your eye out.
Alex, thank you so much for your insight, and thank you for watching. For more financial content, don't forget to like and subscribe to our channel.